Happy Monday, everyone. Happy Easter, if you celebrate. This is the metal markets. I'm your host, Market Stoker D. Let's have a look at the early levels for today. Now, London and the majority of Europe is actually closed today, so the only real push that we're going to get in volume is going to come from the regular trading hours. But that's not to say that there won't be movement, and we're certainly seeing movement across the board already. Asia was not as lively as it normally is, especially not on copper. Gold was a bit more lively. And gold is actually hanging above the Tokyo high, having smashed through the big call wall at 4,700. We do have a level all the way at 4,750, and then higher up than that we have 4,800 as a mega call wall in the most kind of immediate outlook of the levels. When it comes to silver, silver is in a similar situation, but maybe looking a little bit weaker than gold. So let's just do this. So the Tokyo high, let's just put this quickly. It was 7 o'clock. There it was. So the reason why I say silver is looking a little weaker is because it wasn't able to hold on to the Tokyo high. Now I am going to change this correlation to gold just to see where we are. Now silver is very correlated with gold today by almost a factor of 1. So gold is going to be the one giving us clues. David says that Asia also closed. Really? Do they celebrate Easter? I wasn't aware that they were closed. Let me just double check that, because now you've confused me. Yeah, you're right. They have a bank holiday. Alright, so somebody was still trading this, right? So it must be, it's not institutions then, it's going to be the small players. Beach and Snow says, oh wow, I didn't realize London was closed. Yeah, so the London Stock Exchange not open. We usually do bank holiday Mondays. Whenever there's like a public holiday, and I know that the States never really do that. They typically do Fridays off or partial day, and then you go into Monday as a normal working day. But over in Europe, we like our holidays, so they just close everything. Even the shops are not open, and the stock exchange certainly isn't. That's not to say that there aren't players in the market. So obviously we have a lot of retail players that are still trading, and as long as there is a possibility to place a trade, obviously the retail traders will be in on it. But just looking at the ranges on the metals specifically, they're not as big as they normally are. So typically in the recent times, if I look at the average ranges, just go back. Just give me 1 second here. So we're going to have a look at what the ranges were doing. Yeah, so normally Tokyo moves gold like well over almost 1,200 ticks, right? And overnight it moves 700 ticks on gold. So that's still a big movement because we have a lot of volatility, but it's not exactly exceeding or doing the same sort of movement as it normally does. But there's still movement because we have headline risk and everybody's trading. So naturally, it's going to be a little bit more lively. But overall, it's not as big statistically as it usually is. It still gives a pretty decent reference for, any kind of future movement. And right now, we're kind of seeing silver failing back into that Asia range. One thing we have to be careful of is gold, because gold is above its own Tokyo high. So if that happens, we're then going to be seeing maybe a bounce from there, because we smashed through the huge 47 level. And if we take the gold as a kind of a benchmark, if we go all the way down to Tokyo high, there's a very good chance that that will be one of the good sort of continuation areas. Or it fails, I don't know. I've got the same chart as you do. So we'll definitely keep that on the chart for orientation. But the bigger levels are further out at this point. So we're kind of in the middle of nowhere when it comes to gold. Looking at copper, I do have a little short copper on the account of its own failure to advance past Tokyo high. We're building value right after this smash through. Almost reached this weak call wall, which we've had on the chart from last week, 570, still an orientation point. And then we have some moderate levels at 575, but then after that, nothing really much until we reach 590, which is still a gamma wall. And then we also have some support around 550 if I look at the options chain. Copper, Tokyo was very small comparatively to the other two. And that's okay, because copper is actually not as crazy as some of the other products. So that tracks. Right, let's also have a look at crude oil, because everything is happening for crude oil now. Crude oil levels in a bit of a weird situation. So I have a pretty decent level at 112. Previously, during this session, the price went up to test that and then just smashed straight down. Really outside of the 112 level, I'm not really seeing much until we get to 103. So if there's some kind of a deal or a ceasefire or negotiations are successful, I really wouldn't be surprised to see crude oil back down to 103. But there are some caveats that we need to take into consideration. Now, recently, Asia has been pretty active on crude oil, so naturally I want to place that as a potential orientation point. Here's some stats when we have a day where the London initial balance extends higher, but it's a shallow extension, then rotates back the other way. If we stay inside the midpoint of the London initial balance range, and the London initial balance range is going to be this little box that I'm going to draw. So that's your London initial balance. Now, if you notice, there was a little bit of an excursion out of the initial balance, smacked into VWAP, rotated, perfectly normal. But the question is, now what? So this is where I like to look at the stats. And I look at stats in two ways. I look at them as statistical probabilities, but I also know how certain days play out. Now, if we go way past the Asia low and we close with no buying wicks, no drama, and it's not headline driven, but it's purely a technical move without anything else driving it, the smash of Asia low increases the probabilities of the price staying underneath Asia low, but it doesn't mean a proper trending day. However, it does minimize the potential of NYMEX making new highs. And it's not trivial, but only 22% of the days when we have the situation of price action going below the Asia low and sustaining, only 22% of the days create the NYMEX high. So that's something to consider. Can we still have a range kind of base day? Yeah, absolutely. And that's kind of going to be maybe my my orientation for crude oil a little bit later on. If we go and maintain the 50% of London initial balance low, now that means that we never retest the Asia low. That changes the probabilities and heavily in favor of a continuation. So we're going to then look to run a trade as a continuation, avoiding the first half an hour of NYMEX, because first half an hour of NYMEX, the reason why I suck at it so much is primarily because it's a very directionless, noisy time. So I prefer to stay out and then to see whether there's anything developing in the next half hour. But initial balance of London, 50% point, is kind of your orientation for do or die. So if they go lower and Asia low gets tested, it's going to be a bigger range, very likely, statistically speaking. If it can't even get to Asia low, then the probabilities are for the new NYMEX highs. Now look, the new NYMEX high could only pop slightly above VWAP, smack into this gamma wall at 112, and still go backwards. This is the problem with stats. So you have to match them with the observation of what actually happens. So, you know, when you say new high, most people would maybe imagine that NYMEX then goes into a big trending move. It doesn't have to be that. It could still be a range day, right? It could still just kind of smack slightly above the 112, spend a little bit of time and then go and then come back down, okay? But yeah, if we start to break massively on some headline risk, honestly, I would just stay out of that, because that's not a technical move. That is an outlier that typically doesn't have stats attached to it because it's headline driven, and no one can really say how and what they're going to say. That's why, you know, sizing down a little bit or quite a bit, staying away from the main crude oil contract, because that one's going to wipe out your account. Like, even micros are very tricky to trade at this point, just purely because of the ranges that all of these products are doing at the moment. So yeah, do I think we're going to be down at 103 on crude oil? Probably not today, but, you know, stranger things have happened on crude. So I'm staying open to all possibilities today. I'm not coming into the market with any particular bias. I'm just like, well, these are the stats, let's see what they do, right? Tony is asking me, good morning, is my new medicine still working good? Yeah, so I am not having any side effects so far. I did try increasing the dosage yesterday. That was good. I still slept well, so fingers crossed. I didn't crash, so here's the thing. I went for brunch on Friday with a friend, spent 4 hours in a very noisy restaurant. I can't say that the next day I wasn't tired, because I was, but it wasn't a crash. And I didn't have like all the horrible pains that usually come with it. So, you know, it's definitely cleared some cobwebs, let's put it that way. I still have to be careful, obviously, but it's probably the most promising thing that I've tried in my 5-year journey of battling the vaccine injury. So that's good news, right? I'm gonna make another little Instagram post today, if for those of you who maybe have friends and family who are still struggling with this. But yeah, and I'm not going to say that it works for everybody, because I know that only 60% of people are quite reactive to the medication. For some of the other people, they experience a lot of side effects and stuff, but I'm not one of them, thankfully, so no side effects for me, which is awesome. We have Manny moaning in the background. I don't know what he wants. He's probably confused why I'm talking to a camera. He's a very vocal boy, my little Manny. Alright, so let's see what this copper trade does. Now, if crude oil carries on higher, we do have a bit of a negative correlation between copper and crude oil. They're not like a factor of 1, but it's high enough to warrant some kind of reaction. But copper is much slower, so even though I might do a trade on crude oil, if this goes higher, the copper trade down, the copper short that I have, is kind of the same side of the opposite coin, only a lot more, a lot more calm. Let's put it that way, because it's not as jumpy, and it's a lot less volatile than crude oil. Now, I did have some order issues last week. We still have the, unfortunately, we still have that restriction of copper, and that seemed to have done something to the resting orders. So if the resting orders go above that number, I don't know, it's not really doing things properly. So I'm gonna have to try and stay just on 3 contracts so that we don't oh, there's movement. This is newsy. Feels this newsy. Let's see. Let me have a look. Yeah, headline risk early on. That's what happens. So I'm not seeing yet anything yet, but that was definitely a little tape bomb there, which worked in my favor because we're down 50 ticks from my entry. That's pretty good. I'm not going to be going for like a massive trade just to begin with, because I am still looking at copper as Asia bound, right? And that's not the breakout trade. So there's nothing more at the moment apart from the potential Tokyo low sweep or retest of the London lows, and then we'll see what they want to do. But for now, we're just like Asia range bound, so it's not a big swing trade. It's just a rotation through the Asia range. Yeah, it's news. Yeah, it is news. Anytime you see a movement across the board that hits like everything, that's headline risk. This is why we say it's so dangerous, because whatever you're trading, whether it's crude oil, whether it's NQ, whether it's ES, whether it's copper, like whatever you might be trading, everything is literally subject to headline risk because they are listening. And because of all, you see these correlations that I have, they're not there just to make like some pretty pictures at the bottom of my screen. They're there to tell me how much of a correlation is there between them. And I will tell you that throughout the entire last year, there was very little correlation, even between something like platinum and gold. But now we have gold and ES that are almost correlating positively by a factor of 1. So that means if you're trading ES and gold, don't trade both at the same time without some consideration of partialing your maximum default position size across both of them, because it's effectively the same trade, right? But you can also see that crude oil is negatively correlating to GC, again by almost a factor of 1, minus 0.7. And you can also see that that copper is also correlating somewhat negatively with crude oil. So, you know, this is like typical headline risk. Risk on, risk off, everything. GK has a good question. When you say Asia bound and Tokyo, does this mean the same thing? Kind of like Europe and London hours? Yeah, sort of. The reason why I started to differentiate between Tokyo high and Asia open is because I use a particular number for a Tokyo high end, which doesn't include Shanghai. So I use Globex open, so whenever the market's open, that's the starting point to look for highs and lows. And then I cut that off at Tokyo high. Because I realized that Shanghai, more often than not, brings us that reversal as soon as Tokyo closes. So it's like, that is the sweep, right? So if you get a sweep after Tokyo closes, that is one of the setups. So it's not like, oh yeah, let's look at the entire Asia high, Asia low, and then cut it off at London, and that's your reference. It's, in my experience, the way I do my algorithms, the Tokyo high cutoff works better. But yeah, I kind of use Asia range and Tokyo range interchangeably. So you are definitely right about that. All right, trading nickels, thank you. Critical news. Attack on Iran's South Pars petrochemical facility in Asaluye. Fars News. Okay, so that, we'll see how they react to that. So far, they kind of smacked into this POC, point of control, on the visible range profile and immediately reacted. So, and again, because this is crude oil, don't think that immediately it's going to go up. They still need to go and pick up some orders somewhere, and that means technicals tend to work a little bit better on crude oil specifically. It's a very double-edged sword. No matter how, terrible or positive the news is, crude oil always does this thing where it goes to grab liquidity wherever before it kind of turns around. So, yeah. GK says, damn, so many sessions. I'm building an indicator that helps me see the sessions. I'm struggling what to put in it. Sorry, I'm experiencing a bit of weird rib pain for some reason. So what to put in it? It depends on what levels you use. Do you trade pre-market? Do you use pre-market? Because to me, like, let's say we're looking at equities, and if we are looking at the overnight as the entire session, once you get the RTH, I actually changed the way I look at the algorithm. And that means the entire overnight session becomes overnight high, overnight low. I don't actually like to differentiate between the two, because if Asia went lower than London, the Asia low is your reference point, not the London low. Why? Because the Asia low made the swing. So that becomes your kind of like liquidity sweep point. If you have the London low pre-market that went lower than Asia, that becomes your reference point. So, try to kind of reduce the clutter as much as possible. So don't add stuff. I would say smush things together if one supersedes or precedes another level. So I wouldn't be going, oh, this is pre-market, this is that. I think that's a little overkill. Because the swing high, swing low overnight, that is what we're looking for, yeah. But yeah, too many things on your chart usually means confusion. So we don't want to do that. And I know that I've got a few lines on here, but they're all different concepts, right? So I have developing value, which kind of tells me how the auction is doing or not doing. And then I have Asia high, Asia low, because that tells me where we are and are we potentially breaking out or not. And then I have the gamma levels. That's pretty much it, right? The rest of it is just VWAP. I mean, really, like VWAP is like a moving average, but better. And yeah, so try not to do too many things with the overnight levels, because overnight is overnight. That's your swing. That's it, right? Gary BB says crude's still falling. Yeah, exactly. So this is what I said. No matter what the news is, crude oil does crude oil things, and this is what makes it so tricky, especially for equity traders. A lot of equities traders find crude oil very difficult, and now because they're so correlated with or negatively correlated with the equities, you will find that that equities have been behaving a lot more like crude oil, which means misery for everybody who hasn't ever traded crude oil, and you don't know that it's a double-edged sword and how much it can wick in a day. So Beach and Snow is asking how are my 8 dogs doing. They're doing fine. We're having some difficult days with the Cavalier currently. He decided that he's not hungry, and feeding him is actually really difficult. But I think that's due to, because I'm pretty medically aware. I'm not obviously a professional or anything, but my experience with doctors has been a little bit subpar, especially in the UK. And I just don't trust anyone. So I do a lot of my own research, and I think they went a little bit overboard with the diuretics on him. So it was making him dehydrated. So therefore we're trying to reduce that, and I'm going to have to recheck his kidneys because they can hit kidneys pretty hard. So yeah, the poor boy is struggling a bit, but he's still very happy to go on walkies, and he still asks for his bowl, and he's still sniffing all the females and chasing tails. So, It's just that he's going through a period of inappetence, as they say. But there's no, excessive thirst or anything. So it might not be kidneys, but I just want to make sure. I think it's him getting low blood pressure from this new medication that's doing what it's supposed to be doing. But sometimes the heart meds can go overboard and make you feel terrible because they lower the blood pressure too much, right? So it's a fine line. But, he's still alive. Grateful for that. He's 13 years and 6 months old at this point. Already beaten the odds. And he is the daddy of our puppies. So even when he goes, we're going to have the 6 crazies to remind us forever and ever that he was one odd cavalier who should be, by the way, studied for his like metabolic side of things. Usually cavaliers are so overweight, right? He's always been super skinny, and even when he was like eating a lot, he eats double the amount, or he eats more than our biggest dog or his biggest son, which is like he's 13 kilos, 14 kilos, and the cavalier is like 8.6. So he's a smaller dog, and yet he's eating the same same amount of food, not really exercising, and yet still maintaining a super trim figure. It's crazy. It's absolutely insane. So, when you get old, isn't that supposed to be like terrible, and you're supposed to start gaining weight and not processing things properly? I don't know. But not our Lenny. Lenny is like, no, I'm still just skinny. Like, okay, dude. Cool. Let's drop down to a 5-minute chart on copper just to see what's going on with that correlation. Alright, so you see correlation is kind of pairing off a little bit. It was negative minus 0.5, now it's kind of heading towards 0. So it's 0.3 now, negative. And therefore this trade is still not in danger, and it's a little bit, it gets a little bit tricky in and around the pre-NYMEX side of things and pre-COMEX, where these correlations can start to change. So at that point, I will drop down to a slightly lower time frame, and then I will make up my mind of whether the same trade is still happening, or maybe I can run, like, let's say, short crude, short copper at the same time without that correlation putting a wrench in the works. But that's, it's a little bit tricky to do that because it requires multiple charts, and you have to really have a framework, like Coach Jay, myself, we all have like these heavy frameworks where you always know what you're looking at regardless of what product it is, and you will always recognize the setup within that framework, so that makes it easier for me. Alright, so crude oil is about to tag that Asia low, so if they go and test that, those probabilities of new NYMEX highs will be minimized to about 20% probability. So that means even if I do run a long as a kind of a range day trade idea on crude oil, that has to be either like aiming for half of the range that we get during the regular trading hours, not actually aiming for a full failed auction, so it kind of just gives me context. We're not there yet, it's still kind of battling in and around sort of 50-60% of the London initial balance, but I want to see how this 30-minute time frame finishes before I decide. But yeah, be very careful with crude oil, it's so horrible. I mean, I love it, but the ranges are just like a killer. You can read the market, you can be correct on everything apart from the stop size, because stop sizes needed are absolutely ludicrous to survive any sort of noise. Alright, 8 seconds until this 30-minute time frame candle finishes. Usually if there are any institutions doing anything, it's going to happen at the 30-minute mark, because there are institutions that will execute large orders only on a 30-minute mark. Pine says, I have a Labrador, Labra. It's 16 and it's so shocking to see them cross the averages. Yeah, but it's a good thing, right? It means we're doing something right. We seem to have dogs living really long lives here. Our first boy lived to be almost 16, so... And he would have lived longer, but I think because it was COVID and he was a Yogi Bear, and people were leaving like trash everywhere, and it was I suspect there was this like homeless dude that used to put like rat poison everywhere because he didn't like dogs, and he was sleeping in the park, which was disturbing in its own right, and he was always like chuntering and being super mean, and yeah, and I think our poor Mint must have eaten something and then it trashed his kidneys, so that wasn't great. But yeah, otherwise he would have lived. There was nothing wrong with him, so that was interesting. Did I ever meet Tom Dante? Guys, hilarious. I haven't, but I also think that he's very funny. Great guy. He can definitely trade. Typical sort of English dude who doesn't care about being super outrageous. And yeah, so never had the pleasure of meeting him, unfortunately. I've met quite a few people in the industry, but somehow never met Tom. Never say never, you know, maybe I'll meet him at some point. Would like to. I think it would be a good guy to go drinking with. Oh, the Gary BB says, my Great Pyrenees is 10 and probably won't make the week. I'm so sorry. I know, it's terrible, isn't it? Alright, so crude oil so far having a penchant towards the downside still, despite this news. And about to tag the Tokyo low. So copper not reacting to anything. Not much anyway. Yeah, and the correlation is almost positive. Well, or zero. So not much correlation. So we'll see. We'll see how that plays out. We're still inside Asia range. We're still tracking through the value area, which is a developing value. I'm not a huge proponent of developing value area use, but in this case, because we have nothing else, right? So we don't have the initial balance anywhere close because we're actually hanging above it, but it's against the outlook of what the Asia high low have done. So we're still inside Asia low, but we're outside of the initial balance of London. Typically during this time, if I'm running a continuation trade, I will cut it as soon as I cut the stream, or at the very least right before, sort of like 5-10 minutes before COMEX starts. And the mean reversions tend to have a better excursion, so better MFE, than the continuation trades. So continuation trades on copper at this time, for me, tend to be more kind of scalpy, rather than going massively for some massive targets. And I also think when we look at the daily chart, let's actually have a little glance at what's happening on the daily. Daily chart moved away from that accumulation, but now it's doing a copper thing where it's establishing yet another range, and it's like chopping inside the previous candle range. If this is like a true reversal and a continuation of this break from the accumulation, you don't want to see a range, you want to see a continuation, but we don't have that yet. So if you get an overlapping bars, that usually means they're building structure and the movement is not nearly as strong as it should be in a proper trending market. There's a little bit of a fundamental side on copper where there is increased Chinese demand for copper, but for now that is not really showing up. So it's showing up a bit, but it's not really a strong trend just yet. So mean reversions during pre-market COMEX and maybe slightly into COMEX, and that would be Still a 50-50 trade, but bigger excursion, so bigger movement expected. All right, let's have a look. Benjamin Butler with an 80-year-old tortoise. Yeah, they outlive everybody, don't they? What is not normal is that NQ and crude oil are both short. Okay, let's have a look at that. Are they both short? So I'm going to ask a question, what time frame you're referencing. Because to me, this is still negative correlation, right? So you have, they're not both short. Crude oil is sideways with an upside pop. And whilst the upside pop was happening, NASDAQ went down. That's a negative correlation, according to some of my outlooks. But yeah, so still minus 0.8. Now let's have a look at the 15-minute time frame as well. So yeah. This is not a perfect correlation, right? It's not like a factor of 1. They're not going to be twinsies. But look, this one goes up, then sells off, selling wick. This one sells off, then goes up, buying wick. Yes, they both end up as a short candle, ultimately, but the buying wick and the selling wick are on the opposite sides of the story. That's a negative correlation, so yeah. Hermes 33 Ways says, how do you determine what instrument to trade? Don't you have multiple strategies for different instruments, even focus, scatter, or not? Well, not after 20 years. I'm guessing if, if you are a younger trader, and I mean, look, I've been doing this for 20 years. Over time, my frameworks would have developed enough so that I don't get confused on what to trade, right? I look at average session ranges, I look at certain levels, I look at whether we're inside or outside of value, I look at where we are in the gamma levels, orientation, how strong or weak the auction is on the day, and then I decide also because of the volatility, which one matches my risk better. But at the end of the day, it's down to the framework, right? So it's the framework that decides which setup is stronger on the day. Now, like I said, this time of day is always tricky because most setups are like 50-50 at best, maybe like 53 and 47. But, generally you're looking at a coin flip. Why? Because you have the overlap between what is normally London, even though today we don't have London, and then the regular trading hours. So that whole volatility expansion as Americans are waking up and starting to do their pre-market process and positions and trying to take some off, place some on, that all aids in the messiness of the statistics that I'm looking at for slightly bigger trades. Now look, if you're looking at a tiny little scalp here or there, you might be able to find high probability trades of, let's say, Asia tests, Asia low test and reversal, but you're not aiming to hold it for 100 minutes, 200 minutes. So, it's different, slightly different styles. And also the reason why, I sit on my trades without over-managing them is because I know that if I over-manage and I don't put my money where my mouth is and leave it alone, that over time hurts my performance, right? Because the expected value is not what it is. If you're constantly bailing early and yet you notice that most of your trades eventually do reach target, maybe after some shenanigans inside the zone where you started a trade, that tends to hurt my actual expected value in the performance rather than what the actual framework tells you to do. And my framework always says if I'm looking at any trade, I'm looking at a 90-minute hold time on the shorter side, and I'm looking at like 4, 5, 6 hours on the larger swings when they appear, but they are rare opportunities. However, I'm perfectly able to recognize them. So how do I decide what to trade? Like I said, that is probably a matter of experience and framework. Many people don't want to give time for the skills. A lot of you are expecting to have the same skills at like 3-year mark of trading the markets, just like somebody who's been trading for 20, 30, 40 years. And I can tell you that that's the same as looking at, let's say, a musician who just started playing an instrument 3 years ago versus someone who's been doing the performance for 30 years. So clearly there will be some experience there and, skills that might not be super obvious at that time. So yeah. Yeah, so there we go. So Hermes says, 20 years, wow, wouldn't have thought so. Thanks for the answer. I've been trading for 2 years. Yeah, exactly. So you're still very new. Also, let's look at surgeons. Who would you trust more? A surgeon with 2 years experience or a surgeon who's been doing it for 20 years? So, it all comes back to how many different situations did you live through? Did you survive them? Did you, did you manage to blow up, or did you manage to stay afloat? And then anytime you stay afloat or you do well in certain conditions, you learn from that. Whether you're doing it consciously or not, that's a matter of how you approach your journaling and stuff. But yeah, so for me, I don't have multiple strategies. The multiple strategies thing, price is price, gamma levels are gamma levels, VWAP is VWAP. It's not going to be super different. The only differences might be in slight behavioral patterns in and around those levels. Like, does it overshoot then reclaim, or does it just touch VWAP and immediately react? So those are some things that you learn by just pure observation. There's only a limited amount of things you can do via backtesting, and the backtests do not replace actual forward walk experience. What's a forward walk? It means that you basically turn up, you do a trade, and you see what happens. There's also the other side of the mental triggers, which are always different for every single person. So you will be looking at someone who finds taking partials very positive for their psyche. For me, it's absolutely terrible because I'm looking at it as taking a chunk out of the move that I know is coming because it's stats, right? And even if it doesn't, I couldn't care less because it's expected value over time, not per trade. And then me taking a partial and actually that becoming my mental trigger because I'm now annoyed, right? This is like complete polar opposite. Or someone who finds sitting in a little bit of a drawdown in a trade super uncomfortable versus me having my stop at a complete invalidation point and then just sitting in a trade and looking at this whole area as a zone rather than where's my entry, where's my entry, where's my entry, and like freaking myself out, right? So those are, very, very individual mental triggers for different people. Also, some people love taking the break-even stops. I find them so irritating. Like every time I get stopped out for break-even, about 90% of those trades end up going to my original target without ever touching the stop. So I'm like, okay, so that's now frustrating. And now I'm, those are some of my causes for tilt because I can see it, but maybe I'm trying to trade with larger size. That affects me as well compared to the account balance that you have available. Then, you can have a situation where I've sat in a trade for 2 hours and then maybe we get, a little bit of a wiggle, but then ultimately the level still works out. However, because I trailed the stop, now I'm in a position where I don't have a trade. I wasted 2 hours of mental capital and then it still goes my way. But now for me to enter, that would mean a worse entry. So all of that to me is like very triggering in a way. And even though I'm generally pretty good with emotions, I have my Muppet moments just like anybody else, right? So I'm like, oh, you bastard. And then I start doing silly things. I can generally stop myself because I'm aware of them, and then I go, okay, you can't trade now, D. Go and have a walk, or you know, go and play some video games, kill some people online, and then come back with a fresh brain. But yeah, so. Hermie says, oh gee, Deeyana in the building. You know, none of us claim that we are, you know, the best. We just do the best that we can on a day-to-day basis. So Hermes also says, I lost £10,000 in market tuition fees, but now profitable. Yeah, I mean, you know what? 10,000, that's nothing in the grand scheme of things. I've known people who have lost 150,000, 200,000, 300,000. And Hermes also says, I look for exhaustion, reversion, fades. Yeah. So mean reversion trading. Yeah. Those are usually my jams as well. But there are times when the mean reversion D has to go sit in the corner because it's not that type of day. And that's why I want to know the statistics for continuations, because traditionally, if you go back like 10 years ago, I actually wasn't very good at looking at continuations, didn't know how to get in on a trade that already started, and I wasn't in to begin with, so that was a challenge for me, huge challenge. And I was terrible at range trading as well, because I kept expecting the range to break. So on the days when the range would get established, I would usually enter at like the edges of the ranges, but for a continuation, and then I would take the entire range. And eventually, you know, the continuation on some days did happen, but on the ones that didn't, that's when I will be sitting in a trade that is just going against me, and then I'm looking at it, and then I'm getting annoyed, and then I'm looking at it and going, it is a range, isn't it? It's a range, isn't it? And yeah, so yeah. Trading Nichols says, I think I'm noticing Trump 48 hours getting another day and a half. Yeah, that's going to happen. But we almost reached that Asia low on crude oil, didn't we? Almost, but not quite. So this is now very tricky because it's like, well, did it hold London IB? No. Did it touch and go through Asia low? No. So now what? Nothing. Now we wait for clearer patterns to emerge, because this is just them messing with our heads. Dave says, migrating to Topstep soon, futures desks has been acquired. Yes, that's right. We are now working with futures desk with all of their stuff that they've learned, and yeah, mergers and acquisitions, right? Let's go. John Hoagland has joined us this morning. Good morning, John. How are you doing today, this fine Monday? That is the real goat, right there. Hoag. All right, so crude oil on a 15-minute time frame, kind of going sideways, but so far, maybe messing around with this, you know, developing value area. If they start to exit the developing value, that might be the in favor of the stats of NYMEX making new highs. Again, if they keep dripping lower, that's going to minimize the stats. But honestly, the more I'm looking at this, the more I'm kind of thinking it's going to be, how did Dolby put it one time, violently range bound. Unless they have like some sort of an actual resolution, which I don't think we're going to get, frankly. Let's be real. But yeah, so I'm thinking maybe that hypothesis of a huge downside extension and then maybe a bounce back later today could be something to have a look at. Let's have a look at gold. How is our friend gold doing? Consolidating above the Tokyo high. Why didn't my Tokyo high stay? What's happening? Okay, so this is Tokyo High. I'm putting this down like a millionth time today. Every time I change the chart, it seems to disappear. It doesn't normally do that. So yeah, Tokyo High, we're still hanging above it. We have a bigger area at 4750. It's only a moderate call wall, but they can act as magnets. Tokyo High and mega call wall at 4700 still remain also areas for potential pullback. So still middle of nowhere, still sideways movement. So I think for the clarification of which side the regular trading hours wants to take gold, we're going to have to wait for COMEX to open. So definitely tune into the opening call where Hogue and the gang are going to be taking you through what they're seeing. So do not miss that. Copper, I'm going to leave this in. So far we're still floating in and around the value. Not really doing much, again, sideways movement, but we are still hanging just underneath the Tokyo High, having swept it earlier on in London. And it's probably the better probability statistic, right? So we fell into the Asia range. It's battling and creating structure in and around Tokyo High. And it's looking weaker than the other two metals. So let's have a look at silver quickly. So gold way up above Tokyo High, right? Tokyo for silver just here, but it looks like it tried to go higher and now we're sort of failing. Copper already tried to traverse through Asia range. So that's why I'm saying copper is the weaker of the three musketeers. Dead Wolf says, my dog needs attention, I can hear it. That's Manny. Manny is a moany mutt. And him and Bernard, who are like, kind of like, they look the same, but one is absolutely tiny, the other one is massive. They're very vocal dogs. So when I start talking into a camera, I don't think they understand there's like other people watching me. They don't kind of get the whole streaming thing. So they think I'm talking to myself. And then they start to go, who am I talking to? You're nuts. What's going on, man? Yeah, but yeah, he's a very very small but very vocal man. Did you want to say hi to everybody? You've seen Manny here before. He was the one that I was mooing at just like a couple of weeks ago. Because somebody asked me if I'm wearing a cow hat and I make a moo sound, what's going to happen? So then I spent a good like minute just mooing. That's my life. Come on, Manny. Come up. Come say hi. Let's go. You can make it. You can make it. You're a jumpy boy. Come on. There we go. Do you have my hair in your face? I'm sorry. So unfortunately doggy school is closed for today because it is bank holiday Monday, so nobody's going doggy school. Ooh, I'm getting doggy kisses in the morning. That's nice. But yeah, this is Manny. He is this is my puppy cam, right? We always have puppies in here. And today it's only Leonard and Manny. Lenny's looking pretty miserable still today. Oh god, I might have to take him to the vet. I don't know what to do. But yeah, this is one of his sons, one of the Cavalier sons. Manny and the other two black and tan dogs, they look like their granddad, because we met the grandparents when we were getting Lenny, and the granddad was black and tan, and he was the coolest dude ever. He would just like lean on you and just sit there. He was very, very cool. Now Manny is a bit more, how would I put it? A bit more jumpy. But yeah, these are my co-workers. This is my co-host today. Yeah, I tried to not get the dog barking in, and if they're barking, I either mute myself or I try to put like a noise filter or something. But they're good, you know, they're not like, they can get noisy for sure, but most of the time, unless it's an Amazon van or doggy school or something, they're actually pretty good puppies. Or cows, they love barking at cows. That's quite funny. But what did you want? Did you want some attention? Is that it? We're gonna go get breakfast later, okay? Because they get a little treat in the morning. All right, so we're sitting right around the scratch area at Tokyo High on my corporate trade, and for now there's nothing really for me to do. This is pretty quiet because remember, we don't have London. There is no LME today. It's bank holiday, so the resolution of what the metals are going to do, I think, is going to come after COMEX actually opens. What's the time? Okay, we've got some time still. But yeah, crude oil seems to be pretty jumpy on headline risk. Can we call this a bullish engulfing? We can, but I would classify it as a weak bullish engulfing, so this would be maybe more a range, because for a 2-bar reversal to happen for me on crude oil, I would actually need to have a strong bullish engulfing. Now, very difficult to achieve with this candle because the wick was so big. But yeah, so this is still sitting inside value, still drifting sideways. No initiation either side, just one little smash from that news that got really quickly sold off. Let me see where NYMEX value is located. We're inside NYMEX value from Friday, which was a short day. No, actually, did we even trade on Friday? We did not trade on Friday. This is a Thursday value. Read, D, read. So from Thursday, it's still inside that same area. Nothing has been changed. Asia tried to go higher. We paired off all of that. And we're now sitting in some new levels. Can you just stop wriggling? Thank you. Yeah. Dave says you need a nice big Belgian Malinois. I don't really hold dogs that I can't physically control because they are animals, and if something goes wrong and they get a bit angry at each other or someone else, I need to be able to step in and control it. So personally, unless I was like 6'2", I wouldn't have big dogs. So yeah, my biggest dog is like almost 30 pounds. So he's about 14 kilos. And he's the brother of Maddie. But yeah, big dogs for me would be a little bit tricky because I'm a very small woman of 5'1". Okay, so copper is doing this classic thing where it does nothing and then consolidates, and then later on it goes into a mean reversion. So for now, I'm still going to sit here. My stop is all the way above the weaker call wall at 570 that had some anomalous implied volatility. And that's why it's on there, not because it's like, it's a low open interest level, let me put it on. No, it's because there's something a little bit weird happening there. And whenever you have either high open interest with high volatility at that level, or any kind of odd combination, as long as it's not all like low open interest, low volatility, those levels tend to be good areas for any kind of reversions. But we also have a bigger level, slightly bigger level, which is a little put wall at 560, which I didn't put on here because it would clutter up this Tokyo low, but it is there, and that's kind of where my target is. So again, I'm looking at this whole area as a zone. I'm not looking at it in relation to where my entry is, right? So I'm using the Tokyo high as a potential entry, and the only thing to do now is just to wait and see what happens. So I don't like bailing out of trades just because they're not doing anything unless it's been 2 hours. And after 2 hours, I'm like, okay, it's had enough time, right? So we're about to have another 30-minute time frame go and print. So let's see what they want to do here. Let's get into the other products. So far, crude oil attempting to slightly push higher on this first few ticks. What would Andre say? Crude oil catching a bid. Oh no, reversing. What are correlations doing? Let's drop down to 5-minute time frame. Correlation between gold and ES, kind of dropping a little bit. Correlation between, actually one GC on here. Between, did not do that correctly, hold on. There it is, okay. So I'm looking at the correlation between gold and crude oil. That's going mildly positive now, but again, this could be just the overlap volatility. And copper, again, moving up and down all over the place. So not much to see there, to be honest. Let's stay on the 30-minute time frame. Let's move this one as well. All right, so let's see. Trading nickel says vigorous exercise has 4 times the value in time of milder exercise. New study using wearable technology for more accurate data. Thinking of being able to control big dogs got me thinking about more strength. Yeah, as you know, I can't really do exercise, so not yet. Maybe at some point. All right, still sideways. What's the time? Still early. So we're just gonna hang here together until we get a little bit closer to pre-market COMEX. And then maybe they'll start moving. Are you gonna move? I like to move it. Did I miss something here? All right. Did you get there? 72 hours, only 50 off 150. Oh yeah. Okay. So it's just trading nickels and Dave talking. Okay. Copper having some jumpiness on the cumulative delta. They try to reduce it. Now they jumped again. Crude oil negative delta, so minus for the entire sort of session from London Open, minus 921. So we'll see. Maybe they will do the whole smash below initial balance low and then a reversal later on. So yeah, I'm still leaning towards like a huge range neutral day, effectively. Trading nickel says, realize I've been trading very tight accounts, making me maybe too careful, and having the freedom of wider stops allows for bigger wins too. Well, it depends what you're basing your wider stops on. If it's based on the expanded volatility, then everything is the same apart from the volatility, but your setups should still be true. And in that case, yes, targets should account for the large volatility as well, so you can run bigger targets. But yeah. Nitish says, good afternoon, Dee. You crack me up all the time. Well, I'm glad to provide some comic relief. We can't all be so super serious, right? Is MGC strong, and do you think it might be a buy at these levels? So you might have joined a little bit late. I don't think it's a buy here, purely because we're in between larger areas. So in my eyes, 4,700 is a good orientation point for further upside. 4,750 might be an area where some dealer hedging could step in. I'm just gonna let the Cavalier out because he wants to go and have a bit of a break. Back in like 10 seconds. So to me, gold is in a bit of a no man's land situation here. Let's scan through the large time frames as well. I'm not sure we did this on gold from the weekly up onwards. So weekly is kind of a suspect morning star reversal. Why do I say suspect? Because of this selling wick here. So that is something I look for on very large time frames. Again, daily chart looks ultra suspect. So is it a reversal or is it a range? So I would, in this context, until something changes, I will say this is probably more of a new range than anything else. Why? Because the bearish engulfing attempt failed. They pulled it up, resulting in a buying wick. That's more often a range than not. Four-hour time frame. I mean, are we at a swing extreme? No. Upside target, maybe up to 4,800, but even that is pretty limited. And yet the risk required, if we're looking at where this thing came from on the 4-hour time frame, that would be like maybe just a scalp. So any sort of a swing trade, this is a terrible trading location for this. So we either need to go down and retest, I mean ideally 4,600 if you're looking at this for longs, and 4,800 for any kind of further shorts. And then 30-minute time frame with intraday levels. I know that we're hanging above Tokyo high, but make sure you understand the time of day. Whenever COMEX opens, the most likely thing for them to do is to first sell off and then to go, all right, so now where are we going to buy it? So this is the intra-session behavior that we see a lot, where the market starts to do one thing and then you're thinking, hey, it's an uptrend, right? Overnight. Wow, a massive uptrend. Let me get in on that. But the nature of commodities is that as soon as RTH starts, they smash it all the way back down. We had that on gold and crude oil and a whole bunch of other products. And I think the most recent one was crude oil. So here we go. Overnight, all night from the start, right? Okay, so we have the pre-market Globex in Tokyo. Then a huge push up. Crawl, 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 up, 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 up. And then we get to NYMEX Open. And look at it. Just goes, ooh, we're really far out. And then it just jumps off a cliff. So yeah. Be careful of this sort of behavior into RTH, because it's not unusual for this to happen. Trading Nickel says, I get what COMEX normally does, but is there a typical COMEX when London is on a bank holiday? So London is not a huge market for COMEX, or anything really. Metals are largely traded as industrial metals on the LME. London Stock Exchange doesn't really do metals, which is why you see this like dry up whole liquidity and sideways movement on a lot of the days. So it's it's not that relevant. So whatever London does, maybe you can use a London high or low if they're somewhere near as COMEX opens. But generally, London being closed today doesn't mean all that much for metals, because it's not the main exchange, right? How do I find those pull code walls and how often do I update them? So as part of my utility Discord thingy, I have to update them every day. So we post them in the morning. So it's not like, hey, this is going to go long here. No, it's just an aggregation of interesting options levels that we post, and that's it. So that's how I find them. It's my own algorithm, but you do have companies like MentorQ and stuff that you can start with if you don't want to do anything yourself. Right, so Comper is being annoying because now it's decided to go into a weird correlation pre-NYMEX, but I'm still going to commit to the trade and not touch it, so be it. Because the invalidation point is way above the core wall. Yeah, so it doesn't really matter much what London does unless it's the one that created a low past Asia low or a high past the Asia high. Then it's like, okay, let's use that as a new reference. But otherwise, it's just like a meh. And usually we would have LME on copper, but not for precious metals, because LME is just industrial metals these days. So nothing much to glean from that, unfortunately. The best way to approach metals would be to see what the value area did on the previous trading day, and then use that to see whether you're inside of it or outside, and then use that as like, oh, we're in balance or we're out of balance, and then try and find levels that would speak to that hypothesis. And Dave says when the C-vol, which is GVZ, is 36 or even 40 plus, there is no stop loss on gold, the Slippery City. Yeah, you would, I mean, there is stop loss, but you would probably need to use like 300 to 400 tick stops to be safe, right? Safe, marked safe from slippage on gold, yeah. Trading nickels. I asked AI the same question. It said metals may lose 30 to 50% of its volume in New York. That is just not true. Did you feed tick data via CSV file into it? Because if you didn't, here's what I'm guessing is happening. It's taking something from like Yahoo Finance or something, and then it's going, well, it opened at, like, let's take gold. Well, COMEX opened at 47.16 and closed at 4700. So it would read that, like slightly less movement, as lower volume, because it didn't move overnight for a million ticks. But then you actually feed the CSV into it that has volume inside it, and you will notice that, like, you can even see it. Okay, let's have a look at the volumes here while we wait. So what is this? Is this Tokyo? Where's the biggest volume? No, this is COMEX Open, highest volume of the day. Okay, let's go back to this one. What time is this? Oh look, COMEX Open, highest volume of the day. Now granted, these days Shanghai Exchange, at least in the beginning, that is on par with what COMEX does, but the volumes are pretty equal. This is why we look at Asia ranges in metals, right? Yeah, so you have to give it tick data not just from London market bank holidays. You need to give it continuous contracts that have all the data, right? London values for crude oil. So London values for crude oil are a bit tricky because they tend to be not as relevant most times. We do have headline risk that has changed that somewhat. So here's how I approach crude oil. So every time we have a bigger movement overnight, I would put that in analysis because it's like, okay, well, they smacked it down quite a lot. The hypothesis for what NYMEX is going to do for my style of trading is that NYMEX will reverse it to a degree. So right now, as we're getting slightly closer to the pre-market NYMEX, we still don't have the test of Asia low. This is still inside the probabilities for NYMEX creating a new high on the day. How far? It's another matter. But the probabilities are still there, right? So whenever we have a massive move during Asia and London doesn't completely move it the other way, two things can happen. You either reverse it or you end up in a neutral, boring day. Now, because of the headline risk, we're going to have a pretty big range, I'm guessing. But more often than not, if Asia and London were pretty lively, you end up with NYMEX being a snooze fest. So unless we get some good news or bad news, I don't know how much juice NYMEX is going to have. But that has nothing to do with London not trading, right? It has everything to do with the kind of market conditions that we're in right now. So yeah. And AI does hallucinate. So to give you an example, I was working on something in relation to one of my algorithms, and we've all started using AI quite a lot. And I said to it, okay, so now log in and see if you can run the app that I created with like different bot scripts and stuff, and and see whether you can drag out the real-time price of gold. This was when gold was around 4,000 last year. And he comes back and he goes, the current price of gold is 2,850. So I was like, and where exactly did you get that number? Because I can tell you, you didn't get. I talked to it like it's a colleague who's doing stupid things. So I said, where the hell did you get? Like that was maybe the price of gold last year. And he goes, oh, well, the auth failed, so therefore I couldn't get the real-time price, and therefore I just assumed, because historically, in the last 2 years, gold has been around 2,850. And I was like, no, next time one of the things fails, please say auth failed, now what? Ask, don't make shit up. So, and then I was like, what are you doing? And after that, I was really mean to it. Like I had words with my AI. And then in the next thing I said, okay, so now let's see if the auth is going to work properly and parse the data that it needs to parse. And this time, no bullshit. And I kid you not, it does all the lists and stuff. Okay, but it succeeded. And this is what we got. No bullshit. So it's like, okay, that's pretty funny actually, AI. So yeah. Yeah, be careful of AI hallucinations, okay? It's like, it's caused more trouble than it's worth. So you have to feed it good data. You can't just give it random things with no tick data for what we're doing. You actually need pretty high quality tick data in order to run any kind of stats that will make sense. Because otherwise, or anything that it would do, it would just be like off Google or something. And, it tries to get some data from somewhere and it doesn't actually tell you what it's doing, and then it just spews out complete nonsense and you have to catch it. And if you can't do that, if you're not able to do that, you're going to have a lot of trouble and maybe even fake stats. I mean, typical thing, right? Oh, COMEX loses 30 to 50% of volume. In what universe is that true? Like, I frequently ask it, are you blind? Are you blind? And then I give it a reference photo, and then it's like, oh, yeah, hold on. I got that wrong, didn't I? And I'm like, yeah, you did. Kelvin says, I had words with my coding agents too. I can relate. Yeah, I think everybody's going into this situation of arguing with their AI. Okay, so we tried to get up to that 570 level. So looks like they did a little sweep from there. So hypothesis still stands. Nothing for me to do. And we just have to wait until more serious volume comes in. George says, my devs should guide me better. I don't need a guide to create a simple auth that parses some JSON. But thank you for that. nice sort of mansplaining moment. My devs do big stuff, right? So they work on very complex algorithms that have to be like put in a particular box, and you know, whenever you're trying to do algorithms for institutions, you can't just give them any old thing. They want to have like a good tag of what the algorithm is about to do and why. You can't just go, well, we've entered a trade. Why? You don't need to know that. So you will never manage to get into any institutions like that. So you have to give it the reason, and I'm terrible with that. I'm super messy, right? My algorithms do what they need to do, but I'm very messy. So I know what's there, and I know which part does what, but then I give it to somebody else, and they're like, oh my God, do you really? I'm like, yes, sorry. Trading Nickel says, I've actually been thinking with a conspiracy brain, if AI says wrong things to get you to open up more when you explain how it's wrong. It hasn't done that to me. It hasn't done that to me. George, I know. I'm joking with you too. So, you know, we're all friends here. Don't worry. We're good. And I get it. I'm a woman, so you don't assume that I code. You know, it's been the story of my life. I don't blame anyone, but just wanted to point it out that I do know a few things here and there. But I don't take it personally. You know, I'm not... I will pull you up on it, but I'm not going to get insulted. Does that make sense? All right. So yeah, we're going into selling wick now. So some people will be sweating their nuts off through the drawdown. But because I'm only in 3 micros, this is actually pretty comfortable. And the zone is still holding. And we have not exited the value. We have not even moved it much, I don't think. Did we move it up? A little bit. But not like significantly for me to go, oh yeah, POC has moved above the... So here's the thing. If POC moves above the Asia high, that is not what I want to see for further shorts. And that's the point where I will maybe re-examine my hypothesis. But for now, even though London took this into a bigger move upside, this is purely a result of lower liquidity due to LME not being open. So we still have this little hole, little gap. And that's probably going to be retested at some point. Now, I don't know whether they're going to retest 560, but the middle of this range is still up for grabs for me. So I'm going to try and stay in on this for as long as it allows me. If I don't get shaken out through the COMEX IB, you know, maybe I will, if I'm already in profit there, I might just scalp and take the smaller move. If it shakes me out, it shakes me out, so be it. And that's it. Calvin says, you're a woman? I thought you were a trader coder. Sorry, my bad. No, I am. Yeah, I identify as Jedi, for anyone asking. There's no genders in Jedi. You're just a Jedi. Dave says, I talked to AI. I sent it images for 30 A+ setups. I asked if it could understand my strategy. Frankly, it did a very good job of understanding what my rules probably are. Yeah, no, it understands perfectly. But when you're asking it to sort of drill deeper into the stats that you can use in real-time environment, that's when it gets a little tricky. And it really behaves very different when you give it high-quality data rather than just asking it random questions and then expecting it to find data available online, because usually tick data is not something you can get just like willy-nilly off Google. How can I place, Victor says, how can I place the volume profile properly? I need your help. So first thing, let's go through that. You need to know the regular trading hours and probably even the current session that you're looking at. Nothing without that. So let's use copper for this purpose. So I'm going to delete this. I'm going to expand this. We've got a few more minutes. First thing, find London open, right? So where is it? Here is this candle. for my time frame, that's 8 a.m. because I am in London. Then you take volume profile, close this, make sure that your cursor is at the bar on the 30-minute time frame where it needs to be for the start of the session. Then you click and hold, don't let go, and then you drag it to the current bar and click again. Okay? And then you get the visible, the volume profile fixed range, right? Now, as the bars keep printing, you will need to re-grab this and expand to get more data. I prefer the TPO profile for this very purpose because it's already there in the settings, and it just keeps it there. So, you know, one of the big issues with volume profile is that if you're looking at it and then you get busy with something else and then you don't expand it, you're then looking at the old value, and that can have its function too, where, you know, if you want to see where the value moved up and how we've moved through time, it sort of gives you this little back test. But it's also telling me that we're now building structure inside value. We haven't actually even extended it. Even though the TPO profile, I know that we extended the initial balance. So I kind of smush those together and it gives me more situational awareness. Now, Douglas, for the visible range profile, that has a different function for me. To me, that's more for large time frames, and it can kind of replace supply and demand core analysis. Not for me, because I've been reading supply and demand since the dawn of time, or thereabouts. So for example, I know that there is a supply here, I know that we had a demand here, and I know that there's a bit of a hole in this area. But if you don't know to critically analyze the supply and demand just from pure price patterns, and you know, volume and price are very correlated in a lot of the cases, especially on large time frames. So when you have something like a supply and demand, you will see that they are pretty much the same. Because whenever you have a large move, that is typically a move that results from a number of trading activities, usually with bigger size, but then it kind of moves through these levels, creating a low liquidity area that is frequently retested. This is why we say that supply and demands do get retests. So then it's up to you to figure out whether it makes sense intraday to use a particular high volume or low volume node. This section. So let's try and place a little ugly rectangle again. This would mean that we've popped into this kind of single print drop, and we're so far rejecting it, even though on an even larger time frame, it looks like we're really trying to move away from that accumulation that we had on the daily chart, but we're failing at the moment, right? If that ever changes, then maybe I will, you know, maybe we get another strong movement up that gives you another single print and another lower volume area to work from, and then you use that on a retest for longs. So it's all like kind of like, you know, very fluid. I look at it as a symphony with each of its instruments, and then you kind of try and connect it all together, if that makes sense. So yeah. Yeah, so I prefer just core supply and demand analysis, but there is definitely a lovely use for visible range volume profile as well. For granular view though, TPOs and fixed volume profiles are definitely something I turn to a lot. What's the time? We have 2 minutes left. Let's see another question. Lucas says, is it just me or the trend lines and moving averages in VWAP are not properly shown until I manually scroll left onto the charts to load previous prices? This only happens on lower time frames. Honestly, I stick to the 30 minutes for VWAP and stuff. I don't really like I've got bookmap for anything more granular, and I don't have that issue. So, for example, if I stop moving to the left, this VWAP is still there, but it's a 30-minute time frame. So I have not, like you've asked me this before, I have personally not noticed that. So yeah. BYO says, wish the volume profile on TSX would extend right automatically, so annoying to have to keep moving it. Yeah, I somewhat agree, but I also like the opportunity to kind of move it myself so that I can have that little back test. It's like, did we move value? Did we not move it? Where do I get a TPO indicator? Well, at the moment it is not on TSX. If they ever allow us to do like third-party indicators, then I would be happy to bring my Blothic over. But for now, you have to search it out elsewhere, unfortunately. I have my own because I have a software development company. So yeah. Are those wall lines a setting or something you use another resource to track? The wall lines are all manual, mate. They're manual. I spend the first 20 minutes of my day grabbing them and plopping them in here for your viewing pleasure. And they're not an indicator. And by the same token, if there is an indicator, the thing that would be great is for me to just drag my config string from my other efforts of Blothic gamma levels and just, you know, have them plop automatically. But again, we don't have that yet. It will come. It will come. We're not going anywhere. All right, that is it. Let's finish up this stream and make way for the daytime show. Thank you for joining me today. I will probably see you a bit later for group coaching or something. I think I'm on Mondays, Wednesdays, and Fridays these days. So we'll have some time to hang a little bit more. If you've got any questions for any one of us, come and hang, right? And don't miss the opening call where we're going to have John Hoagland, probably Coach Jay, and the usual suspects, taking you through what's happened over the weekend and how to approach this new week as we head into solid April trading time. That's all. This was the Metal Markets. I'm Market Stalker D, your host, and I will see you again a little bit later in the day. Take care.